All right, everyone, we are live. So, how is everyone doing tonight? And we are going solo. I'm supposed to be having guests on, but I don't know. We're trying to see because you got to show your face if you're coming on here. All right, so let me see. I got an Ebony. Ebony, I'm going to try to pull you in, but if you can't have your face shown, you cannot join our stage. So, Ebony, can you show your face on? Because we are on live stream. Are you on your phone or are you on your computer? All right, we're gonna go on. So we are Prophet Hers, and today we are missing a number of people. Um, one, Alicia, you already know you and your family are in our prayers. Laficia, we'll see you soon. And Nicole, hopefully you are able to join in. I know you just coming back on from vacation. Of course, I am always jealous in a good way, but I love to see everyone going on vacation and enjoying everything. All right, so let me see. Sharon and all, can you send a comment on Facebook? I'm trying to see if we are all linked up together. People, just give us a second. As usual, I want to make sure that I can actually see you. You can see me. We can hear each other so that we can get into this office deductions. And when I say home office deductions, thank you, Sharon. Home office deductions is one of those that are either it's missed, is you are claiming clients without using the actual expenses. You're doing the shortcut. And to be honest, we all need to know when we should use each one. There are certain criteria that makes a business client eligible to get either actual or get the
You
simplified.
got,
Hmm?
got a lot of background noise.
A lot of background noise. Hold on one second. I got another person trying to enter the stage. What about now, Sharon?
I can hear you.
Okay, Stephanie, if you can make a comment again, I need to see your face. If you cannot show your face, you cannot come on the stage. So sorry, I have to kick you off from the studio. All right, Sharon. How often do you hear clients talking about they don't get home office deductions and they don't even know about them, or the tax preparer doesn't even question them about it? But meanwhile, they have a home office that they use and they use it quite often.
It happens quite a bit. I think part of the issue was when Trump started taking some things away, people automatically assumed that all of it went away. But
Hmm.
I don't have that problem with my clients too many times. So hold on one second.
That's fine.
Get into my trying to make sure I can still see on here.
That's right. Plus, we're supposed to share it anyway. Let's get this shared a little bit. All right, I'm going to share it a little bit. How you doing, Shanette?
Okay, that's what I'm trying.
Listen, if you are joining on, please let us know where you are joining from, what state you are joining from. Also, for those of you, if you are actually watching this on a replay, just type replay so that we know that you're catching it on a replay. And if you have questions, please pop your questions into the comments so that we can answer your questions for you. So, meanwhile, we're doing a few shares here as we always do.
All right.
We shared it. I'm sharing it on my feed.
All right. I'm sharing too.
Shared in a few groups. Hit your legacy group.
No, it's not.
Yeah, I'm trying to share it now. Yes, I see my head down. I'm sharing people. Give me a second. All right. I've shared it to the locations that I'd like to share it to.
Hold on. I'm doing it from my phone.
Okay. Hi, Dorothy. How are you? Hi, Shanette. Thank you. Either one of you ladies want to come on stage? You can talk about your questions that you may have. Don't be shy.
Okay.
I'm trying to see if I can bring some ladies on stage.
Okay. That's cool. All right. Let me get back to these questions.
She said it's cold in Tennessee. Yeah, I'm sure it is. All right, Shanette, that's okay. You can definitely listen in. If anyone wants to come on the stage, whether you have questions or you'd like to share your knowledge, that will be greatly appreciated. So, first, I want to talk about who can actually qualify. Well, what's the criteria for one to qualify? So, a lot of people think that when you rent, that you qualify. So the question is, do you or do you not? Can you qualify if you're a C corp? Can you qualify if you are an S corp? These are the different questions that people ask, and even I know that I was doing something wrong, and I had to fix this. And this was a few years ago, and I was like, oh, I thought this could be claimed. So you have to be careful on what one can and cannot claim. So now I just lost Sharon. I hope I get her back soon. But then there are different methods that you can actually claim also. It's not always that simplified method where people get $5 per square foot and it can only go up to 300 square foot. No, Sharon, I do not see you. I don't know what happened. But so but that using the simplified version, you only get to deduct 1,500. Hi, Charlotte. Thank you for joining in. So 1,500 is nothing. Now, if you own your home, you actually can claim more than that. People don't understand that you can take some of your expenses from your home, like your mortgage interest or your utilities. I mean, it's a few others, and I'm going to go through everything one at a little bit at a time so that we get to come across. And then we got the Augusta rule. When is that Augusta rule supposed to be used? Can it be used on the S corp? Can it be used on the C corp? How is it supposed to be used, and where did it come from? So it all varies. Now, it must be your principal place of business. So do we understand that? Your principal place of business is where it should be. Most of us don't even know that. And then you must use it regularly and exclusively for business. So that's a room in your house that you are using for business. Like, for instance, I have a home office in my house. I have a whole area that's just allocated just for that, where I have 3 computers, 3 desks, 2 file cabinets, 2 computers. Nevertheless, this is in my home. So this is considered my home office. Sharon, I can see clearly you must got a home office there too.
I do. I have a huge, big, beautiful home office that I very rarely use because I'm always in the office.
Well, at least I know lately you've been putting some use to that, because on Wednesdays or every other Wednesdays, we've been doing these lives, which then makes you work afterwards. And I know you don't do a lot of work from home, because half of us need to know when to get up out of our seat when we work from home. And that's a bad thing about working from home. Now, Sharon, how much if any, do you know about S Corps and getting a home office deduction? Do you know
Um,
anything about those?
I do. I do know that if you have an S corp or a C corp, you can rent your home out, but not if you're a sole proprietor. I'm gonna call. Sorry.
Mm-hmm.
Yeah.
So we're doing home office versus Augusta rule. So she's talking about home office. Now, S corps, they are a little different. So they can get reimbursements for their home office and not exactly the actual home office deduction, because we always know S corps use that accountable plan for all, not everything, but for a lot of personal expenses. So there are some instances where certain entities cannot get the home office deduction. Then it goes to what corporations reimburse also. So you have to understand that reimbursement versus deductions are two different things. And if you know that you're working with an S corp, you cannot use the home office deduction, but you can do reimbursements. And now people want to know, like, what qualifies you for a principal place of business. Basically, it's where you work. If you It's where the work is. I have a desk. There are some people that look, they may do hair inside their home. That is a home office deduction. Or let's just say you do something in retail, and you know that you tag your clothing. I'm not in retail, so I don't know what I'm talking about when it comes to details. But if you tag your clothing, or if you sit there and you fold the clothing, or whatever you do with it, if you have a room that's allocated, then yes, that's considered your home office. And you want to make sure that you're getting the correct deductions when it comes to that. And like I said, a lot of people use to simplify and just say, okay, we know that square footage is more than 300. Let's use 300. They get 1,500. It's so much more. If you are using the actual expense, you get the write off. Like me, I get the write off the interest on my house, the utilities, insurance, repairs. I'm in the HOA also, so I get to write off those HOA fees, property tax. There is a little bit of depreciation in there, but you have to be careful because everything is an allocation. And the allocation is usually based on a percentage. And without me going into the percentage so much, just think about and I'm just using rooms because I'm not going to use percentage. But let's say if I have 2,500 square feet and 500 is used for my office, we know I get, what I said, five and what I just say? Oh my God. I think I said 2,500, 500. So that's 500 would be the amount you allocate toward the actual expenses, which means if it was, let's say, $1,000 deduction, you want to make sure you get that percentage, which is that 25%, because I did that real fast in my head. And you times that by the 1,000, and that's how much you get to claim. But think about doing that on a bigger level. We all know that monthly, half of our expenses are over $5,000. So if you just say you are taking 25%, of that, you already know that's way more money than the 1,500. Or, and I'm just playing around with figures, but the thing is, it is better than you just saying, I'm going to use the 1,500. So I need you all to understand that you have to start using the actual expenses if it overweighs the simple method of 1,500. Now, people ask if depreciation allowed. It is. We all know about the allow. We all know it has to be recaptured when you sell the house. You got to figure out what's best for your client and go from there. And then people say, well, they rent a home. So, but they rent. They're not eligible. That's not true. If someone rents their home and they have an actual area allocated to their actual business expenses, then yes. Excuse me, yeah, that's my baby. You gotta go back with daddy.
So, yeah, every time my phone ring, it cuts me out. Can you see me? Can you hear me?
Yes, I can.
I'm sorry. Every time this iPhone ring, it cuts me out.
You have to put it on do not disturb.
The
Yes.
okay.
All right. So I want to keep going on with the rent.
All
So
right.
if your client rents, yes, they can claim a portion of their home as a home office deduction. Please do not think that because they rent that they cannot. The whole thing is that you have to exclusively be using it for business. So I got my girl back. You back? You said?
I'm back. I'm back. And remember, they take the percentage of the space occupied.
Hmm.
They got to take the percentage of the space that's occupied for the business.
Mm-hmm. Then I've had people come to me that have no idea, and that you want to try to do something. So you could be like, "How many rooms you got? You got five
No, no,
rooms?
don't know they square footage of their house.
No,
Or they
they
room.
don't."
They room.
So I will ask them, "Well, how many rooms do you have?" And they use one room, and you do 1 divided by, let's say if they have 5 rooms, 1 divided by 5, again, that's 20%. So then you would take their expenses and you multiply it by the 20%. So this is why I say you have to be careful, because if someone has 7,000 in expenses, okay, that's not much. That's 1,400. But most people expenses for the year. It's not for the month. It's for the year. So think about like if your expenses are 5,000. If you time 5,000 times 12, that's 60,000. And then if you times that by 20%, that's a 12,000 deduction. But meanwhile, most preparers are giving that 1,500 because they're shortcutting them. You all have to learn how to help your clients when your clients need to be helped.
That is true.
Yeah. Now, what other, and then there is like, what if they use it occasionally? Oh, thank you, Kamita. That's good. So, you can actually, so tax preparers. So, and this is why I like Kamita. You could have come on as well. I've been trying to get somebody to join the stage with us today since we short. But Kamita just said that you can go to realtor.com to get the square footage.
Yeah.
So, this is another way that you can help your client.
Or Zillow. I do it all the time. I
You
go
do
to
Zillow?
Yeah, I ask them their address and I look it up.
Good.
Mm-hmm.
Okay, so then that's another one that you all can use. So we're trying to find out what ways. Yes, Rachel, that's what Sharon just said. She also does Zillow.
So,
Yeah, so but you want to make sure you're doing this for your client. I mean, we always talk about we want to get them deductions. Now, we never want them to go to zero because they can't do nothing if they have a net income of zero. But we want to make sure that we are claiming deductions that are legal, and it does help them save in taxes. So if you do this home office deduction correctly, then you will be fine.
mm-hmm.
That's a good deduction. Now, what about you, Sharon? Do you get a lot of clients that do the home office deduction?
No, not like I used to in the past. I don't. Not like the past. I don't have a whole lot of clients that do home deduction, except for a few clients that I have that have actual have daycares. But
Mm.
I don't get a lot anymore.
Yeah, I work with a lot of service related businesses. And, once COVID hit, a lot of people did start working from
From
home.
yeah.
And once they started working from home, that made them eligible for the home office deduction. And a lot of new clients that I started getting, they was like no one was asking them. So it's like don't ask, don't tell, because they had no idea.
Mm-hmm.
I put that on that's one of the questions on my organizers. And tax pros, a thorough organizer that just says yes, no, or check is so much easier for them than to put in a fill in. So
Uh-huh.
I ask those questions. Do you have an office that you primarily work in at home? And it's like a yes or no. And when they say yes, we know we got to go back to them with more questions. I have a different
Is
organizer
it
afterwards.
exclusively for business?
Yes, that section has to be that. Not you doing work in the living room and
And
saying, I want to claim that.
your baby,
That's not it.
yes, not if you got your baby's what you call that swing in the room, or you got an office and you just in there and you decide you want to crochet, all of that. And I let them know, like, at that time, it has to be 100% exclusively for your.
Yes. Right. No, it's no part-time use. We want to make sure you know that you heard it from us. There's no part-time use.
Yeah, not
So
your dining room, not your living room, not your bedroom. Because
no.
what understand is it's not 100% business use at all. Because if you're in your bedroom, now if you work, if your bedroom is where you work, then maybe, right? You can have one of those businesses. You say, I work out my bedroom. I don't know.
There are those businesses, and we all know there are. Unfortunately, I mean, it is a service, but I don't have any.
Me either.
Yeah, so that's why you got to ask your clients those extra questions to find out exactly what they do, because they don't know and they expect you to know. And so far we want to make sure, and then we want to make sure who, people always think when it's a Schedule C, like that only means, look, they're talking about you, Sharon.
What? I can't see. I'll go back and read the comment.
Oh God. They are saying It is for, you can be a sole proprietor, a single member LLC, you can be a contractor, you can be a gig worker. The whole thing is you just want to make sure that you're an LLC or sole proprietor. But when it comes to S corps and corporations, you cannot claim a home office deduction. You can only claim reimbursements.
Right.
We also want to square away. I'm just trying to make sure. So for people that are just joining, you can rent and you can own a home. People have a misconception that because you rent, you cannot claim the deduction. That also is not true. Oh,
Did you bring
Sharon, I found out I can
bring
show comments on the
two?
stage, so you can see them now.
Okay. Did you bring up the W two employees?
I did not bring up the W-2 employees, but W-2 employees, and unfortunately,
And
you
that's what
cannot.
a lot of people had during COVID. You had people from that work for employers, and it's not a deduction.
Yeah, a
If
lot of
you work
people
remote,
do not
yeah,
know that.
yeah. So I had a lot of those. But I work from home because my job sent me home. It is not a tax deduction.
Not at all.
So
Sorry, and we only enforce the rules. We don't make them. So just make sure you understand what you should be getting is a reimbursement. Oh my! Again, y'all, if you don't know right now, any webinars I do at night, if you hear a baby, it is a baby. Um,
it's her baby.
it said, if time permits, can you quickly go through the calculations of actual expenses? I did just go through that, so
What?
I'm gonna explain
What?
it again. Do the actual expenses. So the items that you get to claim are rent or mortgage, and I mean, let me not say mortgage. Mortgage interest. You
Mortgage.
get to claim utilities, insurance,
Portion of
repairs. What
portion
else?
a
Yeah, I'm
portion.
gonna go to that. Property taxes, maintenance, and depreciation, and you have to do an allocation. So again, if you have 2,500 square foot and your room is 500 square foot, you have to divide them into each other so you can get the percentage. Somebody's coming on. So you have to get the percentage. Hold on, yeah, I'm clearing up something. All right. So we all know that you want to make sure that you get this correctly, and I'm dividing it. Oh shoot, too many zeros. So we all know that that is 20%. Then you want to take the expenses, and I'm gonna make sure I stress when you're doing the mortgage part, it is only the mortgage interest. So if you are, I think I used 7,000 before. If all of those expenses come to $7,000 a month, and you are supposed to get the actual expenses every single month, I use a spreadsheet. But let's say it's 7,000 for every single month. We just using as an example. If you times that by 12 months, that is 84,000. Then you're gonna take that 20% and times it by that 84,000, and that equals 84,000 times 0.20, $16,800 in deduction versus the 1,500. I hope that helps, Charlotte. If not, you can always DM me, or you can always text 470-470-6088 and just text books and ask your question, and I can send you something more thoroughly. I even have a spreadsheet that I use. You're very welcome.
Oh yeah, that's good. A good spreadsheet. That would be good for people.
Yeah, I have one that I use. It's like you just plug in the figures and you do the calculation, the square footage.
With us, that's good. You need to share that with us.
Oh well, I'll send it out. Definitely that. Definitely that. Um, we already talked about the two different ones. I'm gonna keep saying simplified versus actual, and we want to make sure we get it. And
Hmm.
then now we're going to talk a little bit about the Augusta rule, because for home office deduction, it's really not much to talk about. It's just to make sure you are doing it right and you're picking up the correct expenses.
A lot of people don't know what the Augusta rule is.
So the Augusta rule, now, if I'm not mistaken, it was derived from a golf course, and they used to. I mean, when people have a golf outing, and don't talk about me, they let people rent their house out for 14 days.
14 days. Yeah.
Yes, and I'm gonna say it again, and this started because of golf. and you rent it out at fair market value. So if fair market value in your area, and don't be trying to raise it to $1,000. Go get the fair market value of renting in your area.
2,500.
And you times about 14 days, and you're able to actually write that off as an expense. So if you use your residence that way, you actually can write that off. Now listen, you can't write this off if you rent.
Mhm.
Yes, it is rich people stuff, and we're just finding out because this is old.
Found
The
out about
gus-
maybe 2 years ago,
yeah,
honestly.
yes,
2 years
yes, and they've been doing this for years,
for years.
years on years on years. And the biggest thing is you got to make sure you have a reasonable rate. You have to have proof that you did some kind of business events in your house. If you meet your staff every month, if your staff comes and you have a staff meeting. I used to do that when I first started with preparers. We actually met in my living room and I would train them in my living
Too.
room.
Me too.
It was so much easier. And but you got it. Don't think you're gonna just use it and you don't have any backup.
Well, they can use it for, like, I think it's meetings and workshops, something like that.
Yes, yes, you can.
Trainings, or.
Retreat, strategy sessions, anything that you're using it for. If you know that you use it 14 days, you
What?
go get the fair market value.
That's a long meeting for 14 days.
No, no, 14 days out of the year. Okay, so she made me have to say what I'm supposed to. To be quite, I think he only got on me the other day because I didn't say a whole full sentence. So let me make sure I say 14 days out of a year. So it does not have to be 14 consecutive days. You have the whole year to do it. Please, please have backup. Tell what you did.
And it
I
can't
would say
be
who was there.
a Pookie in them either.
Who Pookie in them?
I said it can't be a birthday party for little Pookie in them.
No, no, it cannot be a birthday party. It has to be something related to business.
People get real creative. I had a party for my son, and I was talking to a friend about doing taxes and stuff, and blah blah blah.
They say, well, guess what? They said this on. They said it. Prophet Hearn said it. So we making sure we clear that up. So that Augusta rule is available for those who use. I mean, these are instead of hyping up expenses that don't make any sense, that set off alerts with the IRS. You want to make sure you claim those, like I said, the deductions that you can when you working on your clients. And
Mhm.
don't sit here and try to say that your client have $5,000 worth of income and try to use these expenses. Oh, and you're gonna see that it's gonna be a different kind of turnaround. So you want to be careful when you're using these and be actual.
Mhm.
All right. Um, there is not much more when it comes to home office deductions in the Augusta rule. We will do more hands-on in our workshop that we are having in January. For those that don't know, we have been giving webinars since about September to try to warm you up to some things that we're going to be offering in our workshop in January. So our workshop consists of, we're not going into deep diving into bookkeeping, but we're going to make sure that you understand the financial statements. It's a misconception that you only need a profit and loss when you are working on an LLC. I'm going to tell you that's not true. Even though you don't really need all those figures on the actual Schedule C, you should still have it. You should still request it. You should still keep it in your files. So we're going to show you how to read those. Who can use this rule? Which rule are you talking about? So
The
if you
Augusta rule.
so the Augusta rule can be used by that can be used by LLCs, and that can be used by S corp and corporations. The home office deduction can only be used by LLC, anyone for the Schedule C. It cannot be used for S corp and the what do you call it? I'm writing what you okay. It cannot be used for the S corp, nor it can be used for the corporation. So I'm gonna say that again. That one was for home office deductions. So tell me if I answer. I'm not sure if you was talking about home office deduction or if you were talking about the Augusta rule. But most businesses can use the Augusta rule. The home office deductions is different. You cannot use the Augusta rule if you rent.
You have to own it for the Augusta rule.
No, I think I said that wrong. I'm
Okay.
mixing. I'm about to mix something. It's when I say rent, like if you have, I think it has to do with rental income. Like if you have a rental income home, it's like it's not counted in that Augusta rule. She was talking about the Augusta rule.
Because
So
the Augusta rule is more about income, isn't it?
no, it's yeah. So you basically you are charging
Exactly.
someone to rent.
Yeah.
Yeah, you're charging someone to rent your space. So when at the golf course, they would take their houses and they would rent their houses out to people just doing a golf tournament, and then they wouldn't do it any other time. And that's where it came from. And then people just started using them a little at a time. So you just get to rent them out. If I'm not mistaken, the Augusta rule, you have to own your home. I'm gonna make sure I look that out and just to make sure that I got that correct. So put me on pause for that. I'm gonna check it. As a matter of fact, I'm gonna check into that right now. We're on. Y'all can hold on 1 second because I want to make sure I'm not telling the wrong thing. But I believe you have to own your home for the Augusta rule.
And one thing I learned about it, you know why it's called the Augusta rule?
Why?
Because
Mm-hmm.
it started in Augusta, Georgia.
All right, at the golf court.
Yeah. At the Masters tournament. What
Mm-hmm.
they taught me all of this. I was like, oh, because he played golf and he taught me all of that. Yep.
I'm
They
coming.
asked for it though. That's why they got it.
All right, so I am wrong. You do not have to own your home to use the Augusta rule. So I want to make sure that stands corrected. So Kamisa, you do not have to own your own home. So you can rent out of your property if you pay rent. Yeah, when I don't know something, the whole thing is, let me tell you, you should always have a resource when you're working on taxes. No one should expect you to know everything. And Lord behold, I hope you're not beating yourself up because most of us do not know everything. The thing is to to know about it. And if before you use it, research it.
And have books. I got all kind of books around me.
Listen. I'm seeing it like I got the same. And it's sad because I'm like, oh my God. And they
I will,
highlighted.
I will open the book because there's nobody that knows everything about this tax law. And if they do,
No. Mm-mm.
so yeah, I keep my books. I open it. If I have questions, I'll go deep diving in there. I'll read. If I still have questions, then I ask somebody else. What do you know about this? Because my client actually taught me about the Augusta rule. I didn't know anything about it to
Oh
the client.
yeah.
Yeah, I
I
didn't know.
forgot who taught me about the Augusta rule, but it was a few years ago, and I've been using it ever since.
He lived
And
in a golf course community in Chapel Hill, and he
mhm,
told me about it. I said, I don't know anything about that. He said, look it up. Do you?
mhm.
I did. And I said, oh, so they allow y'all 14 days to rent out your home? He said, absolutely. I said, interesting. And he was of Caucasian descent, but I learned.
And listen, we a few steps behind. I'm
It's
telling
it's okay. It's okay.
you. At least you know, and yes, you can take both because that was another question that people have, and you can take both the home office deduction and the Augusta rule.
Because they're two different things.
Hmm.
Now, and the other one is a home deduction. So yeah,
All right. So I want to still go back to the workshop we're having. Um, you want to speak on the workshop a little bit?
go ahead.
Okay. So the workshop is I already started talking about the bookkeeping part so that you can learn how to read the financials and know how to put them into whether it's your S corp, your C corp, or your LLC. Then we have tools because then you got clients that come to you that have no books. We will tell you the tools that you can use to try to get those books together. I know people talking about reconstructing of income. Listen, if your client has a bank account, there is a tool that you can use. No, I'm not telling the tool. You have to join the course and we'll tell you the tool. But there's a tool you can buy to upload the statements and get them into QuickBooks and do a quick. Most of the people that don't have bookkeeping done, they don't have a lot of transactions. But you can get this all into QuickBooks and do a quick sort and categorization and everything and go ahead and derive their profit and loss statement from there. It is better than you trying to go and look at the statement and take every bit of income and think you're supposed to add all of the deposits as income and all the withdrawals as expenses. That is not true. You will turn around and be double dipping, charging clients having to pay taxes on money that they have put into their own bank account. So when people tell you to do that, please, because I've heard this also. I was just told to put all the deposits in as income and then put all the expenses in. That is not what you do. Because if a client has been making deposits into their business all year, that money is not taxable.
Right.
And this is another thing that people are doing. So we will teach you that. Then we are going to start with actually an S Corp tax return. Now, I want to make sure you understand, we are going through a mock tax return. When you come on, you have to come on with a computer. You're going to get a tax return to work on. And we got 3. Well, we got 2. So we're starting with the S Corp tax return. Then we're going over to the 1040, where you know you got to add the Schedule K1. Then we're going to turn around and do a Schedule C because we're going to have a Schedule C business as well. We're going to make sure that we're going to make this person have kids, education expenses.
Everything. The works.
We're going to put it all in. And we're going to work on the tax return together. This is a 2-day event on January 7th and 8th from 5 p.m. to 9 p.m. So right now, get on your education. I know everyone is on Zoom webinars talking you all to death. If you like me, sometimes I hear wonk, 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 wonk. And I'm like, no. When you come into our workshop, you're going to get a full hands-on experience where you are going to work on tax returns for 2 days. When you are finished, those of you that want more information on an S Corp tax return, where you want to know about this L&M schedule, you will then be turned over to Nicole. We've already said that, and then she can take it from there if you want to do more training. But I'm not sure if she's doing training in January. My whole thing is for us to get you prepared for the tax season. A number of you are just taking clients to be taking them. We want to make sure that you are educated so that you are doing these clients the correct way.
Agreed.
I think that's really about it for today. We are trying to jump in and jump back out. And we broke these up so that we can really go into home office. I think next week is auto deductions.
Auto deductions.
I believe so. I'm not sure, but not next week, the 17th. So we are having another webinar. Excuse me, another live on the 17th of December, and hopefully, if you want alerts, so some of you got alerts, but if you want alerts about the next webinar, you can just send Profit Hers, PROFITHERS, text that to 470-470-6088. I'll repeat it again, and I think I can put it in the comment, so I will. So you text Profit Hers. I'm not gonna spell anyway. To 470-470-6088. If you want information about the workshop we having, please do the same thing. It should be a link coming out to everyone anyway automatically that actually is in that threshold, and we have you in the pipeline so that you will get information about the training.
Okay.
Sharon, you want to
Yeah.
talk?
You want me to say it again? You cut out. Say it again.
I said, do you want to say anything before we go?
No. You said everything. You knocked it out the box, girl. You said everything. Make sure you
Yes,
guys
it was a lot. But what we're telling you is, listen.
around the corner. Make sure you start getting your education.
Mm-hmm.
I had the ASFP. If you're
I was
looking
gonna say that. Don't you still have AFSP?
out, I think I got maybe 10 seats left. And if you tell me that you saw me on Profit Hers, I will give you a discount to get your seat in and get your testing done. And it's not hard at all. Don't be afraid of it. It's not hard. Let me tell you something. Can I be honest with y'all? Can I?
Go ahead.
Use your chat GPT. Use it. It helps. But
And you learn.
no, some things you should know off the top. And there's some other things that you may not know. Don't be afraid to test. Use your chat if you need to. That's what it's there for. And you'll pass the flying colors.
I learn something every year. I'm like, what?
Me too.
I
Me
didn't know
too.
that. And
Me
and that's why I tell people when I'm on here. What someone say? Yeah, you told them you made an error. I said, yeah. I said, why not? I said, well, you think we don't make errors? I said, 30 years. I'm in the game. I say 30. What am I? I am
So,
56. I've been in this game since I was in my 20s.
so
I
many
still make
people,
errors.
and you know what? You said something very valuable. Now I'll talk. So many preparers get out here on social media and they want to make it seem like they know everything. They don't make mistakes. They are 100% error proof. None of us are not. I make mistakes. I have errors. But I own up to it.
Mm-hmm.
Own up to. If I make a mistake, I own up to it. I let my client know, hey, I made a mistake. I may have did something wrong. That's why we have amendments. I'll
Yeah,
amend
and I'm like, let me
if it's
fix
on
it.
me. Absolutely.
I will take the interest. You got to make the payment because regardless of what the payment is yours, but I will pay any interest and penalty if I make an error. Now,
Yeah.
I don't make that many errors, and if I do, I beat myself up horribly.
I don't make many either, but I have made some.
Me too.
And this is me being transparent. This happened to me 2 years ago, and it wasn't me, but it came from out of my office, and it happened. So
Mm-hmm.
put the wrong route and account number on a taxpayer's tax return,
Ooh, shoot!
and the other person got the money,
You had to eat that.
ate it,
Ooh, shoot!
ate it. Thank God. I say this all the time. Thank God it was a small return. And to
Uh-huh.
be honest with you, I had insurance. The insurance paid for most of it. I probably came out of my pocket like about 300 something dollars. And I promised her the next following year that if she come back, I'll do it for free.
Uh-huh.
I'll make sure that I do it and nobody else. And she came back because I owned up to it. It's a mistake. Like I tell them, I'm not perfect. If you're looking for perfection, don't come here because I am not a robot. I'm human.
Yeah.
However, you got to own up to our mistakes, though.
Yeah, you do. So mine was different. So what happened is my sister, she remembers this. But my client, who actually was a family member, when they sent over the documents, they sent over I believe it was this happened in 23. They sent over something from 2022 and 2023. She didn't catch it, and neither did I. So then she got letters, and the letters brought about an audit. And when the audit came through, I mean, of course, we had to claim everything, and it what it did is, when you're in that bracket, if you're in the bracket going up when you're doing earned income, it goes like in a V. So
Uh-huh.
once you get to the middle,
Yeah.
yes. So she was at that certain area. And when we had to take it out, oh my God, it messed her up badly because it took her back. And I was like, holy crap. So
Yeah.
she had to pay that money back. I'm telling you, I felt bad. I was so mad that I did not catch it. And she was too. And I was like, listen, it's your first mistake. And it really was her first mistake. And I was mad because I was like, I didn't catch it because I was supposed to catch it. It happens.
It happens.
And but guess what? She did not come back.
She did.
No, she did not come back. She
And
did not come back.
you got some that are so mad with you, they're not coming back. You made a mistake. You'll never ever see them again. But I was glad my client came back, and all I could do is apologize to her over and over again, tell her I was sorry. She got her money back. And you know the crazy thing about it is, we sent over the forms to the IRS to let them know this other client got money. Up to this day, they're still doing the research.
Mm,
Got the money from the insurance. The IRS was supposed to make sure she get that money back too, and she has not gotten it back yet.
okay. Dang. That first of all, I told you the IRS is behind. They are behind. And as I told you, like what I went through, you already know what I went through.
Yeah,
And I just went and sent them everything from 2019. Come on, you all know you lost this in COVID. This is not my fault. And ADP does not, they did not keep their records at
Mm,
all. So I had to go in and actually derive all new W-2s. The good thing is I had all the summaries, I still had all the information, and
mm,
get that over to them. I just thought it was dumb because if you got the 941s, what's the problem? You got the
right,
940.
right.
And it was only for 1 quarter. So you got the reported income.
Insane.
Nevertheless, I had to go do all that. It took them months to figure out what was wrong. Then they sent the money. Did I tell you I got 2 checks they sent back to me again?
Yeah, yeah.
They sent checks back to me again. And I'm like, here we go again. Stop sending me these checks. But listen, just to let you all know, things happen. You just got to be ready for them. Nobody's perfect. You will make errors. The whole thing is clear up your errors. Um, Always, if you make an error, I'm telling you that you might as well just say, let me just here. I'll do your tax return for free next year since I made an error this year,
So
and you better pick up that client's interest and penalty if it was your fault.
that's it. Oh,
Now,
you got.
I should have put it through insurance. I didn't put it through insurance either. I didn't even think of that. And of course, I had insurance.
And I wonder how many tax preparers actually save some kind of money or cash for those type of events.
But you better get insurance.
I got insurance. Listen, I learned
I
my
do too. I ain't used it again yet. And you could. I use Next Insurance. Get that errors and omissions.
I
Get
have.
it. I was so mad. I couldn't even do it. I was so now I'm thinking about it again. I was like, oh my God. And
Mm-mm.
for it to be a relative was not good.
Okay. Oh,
All right, ladies and gentlemen, we have talked enough. Again, just remember if you're watching this from a replay, say replay. I'm pretty sure you might not watch this whole 45 minutes. If you do, thank you. Um, those of you that want more information about the course, the workshop that we're having in January, again, look in the comments. You can text, and we will make sure that you get that information. Otherwise, that Sharon, it was me and you. Listen, we got through it.
we did it, girl.
Yes, and until December 17th, we will see you. Have a good week, and we'll talk to you soon.
All right, guys. Have a good night.